All right, so welcome back to Watch Trading Academy, and today we are talking about the update to the Ukrainian war and how it is impacting the watch market. So perhaps you've been following us for a while, or perhaps not. You can actually link back to our past market update talking about why the watch markets will remain strong despite a small dip. But today we're going to analyze what has caused the watch market to soar to the height it has risen today and what we can expect assuming this war is going to continue in Ukraine. So the first piece that we want to talk about here more than anything else is really what is happening with this market sell-off, because there's a significant amount of fear going on in the market with everything going on and people dumping their watches, with some of the massive jewelers taking huge price cuts and some of the consumers just dumping a lot of their Rolex watches. So what is happening and why is it happening? So first off, let's pay attention to what has happened over the last year in the watch market that has led us here. A big amount of press around how watches are investments. I've been talking about it. People in the markets have been talking about how watches are safe and healthy investments. And one of the things that happened is as the crypto markets crashed, one key thing happened. A lot of money went from crypto straight into watches. That means that a lot of Rolex watches were bought, prices were going to the roof, global currency kept going up because people were buying from all over the world. And as a result of that, supply chains were once again depleted, driving the price up. But the biggest issue here that people are talking about is these were not educated, long-term watch buyers and investors. These was new money into the market. And as new money enters the market, it is the uneducated buyer that leads these price surges that eventually have to correct. It is no different than experienced investors buying into the stock market and buying Tesla at a record high, not even taking in consideration anything about where the stock would be going, but rather the fact that they don't want to miss out. So there's a very different dynamic to that type of buyer than there is to the average investor that takes place with an intelligent decision around what to buy, how to buy it, and more importantly, how much to pay. Because you see, from the outside in, one of the differences between the jewelry business and the stock market is that on the outside, you can clearly see the price of a stock. However, in the jewelry business, on the outside, you see a very inflated number that is usually listed in the forums or on Chrono24 or on eBay, and that number typically isn't the real traded dollar amount of the asset. So there is a significant margin built in, and that margin is what most people miss when they're not investors and they're not good at doing this. They basically buy the retail price. The retail price leads to higher retail prices and at a rate of increase that is significant, at which point must be adjusted back down. So what's happening now is that a lot of the market basically moved into watches. And a lot of the market realized something at the beginning of this year. One, the stimulus money's gone. Two, mortgage payments and student loan payments are back. So disposable money is significantly lower than before. This is why the majority of investments that are most hurt are going to be your Rolex investments, the ones that people came in last minute buying $15,000 watches to $40,000 watches. That range of watches that are considered investment watches are going to get weaker. Now, in addition to that, we're also seeing that the rage of buying in the markets has slowed down, which is normal and should be expected, which is good. We want this to happen because it gives us a more stable market, but yet a lot of fear because people were buying 300K watches hoping they would go to 5. Well, they are not, so they're going to slow down and slowly go up to 330, to 340. That regular return is more aligned with what should be happening in the watch market, which once again is good. And then the last thing we need to pay attention to is every market is cyclical, meaning that not every market can keep rising all the time at all times at all rates. So, you know, the watch market was really a last 2 years market where it saw spectacular growth across the board. If you were holding watches, you basically made a killing in the last 2 years. And if you were smart enough to join Watch Trading Academy 5-6 years ago, then you made a fortune last 2 years, which is fantastic. But markets have cycles, and this next cycle will be a hold market, which is absolutely okay. Buy rarer and better, harder to get pieces, and basically be proud of wearing them while protecting your money. Now, some important things to keep in mind. Whenever there are wars, and we even heard Warren Buffett say this, inflationary hedges aren't gold because gold has no utility. Watches have high mobility lower cost of entry, and high utility. So for that reason, these three things will continue to make watches a strong hedge against inflation. And we are still expected to continue to see inflation all the way to 2023, which means that right now, while watches may still be in a settling period, they're not in a crashing free fall. And it's important to differentiate the two, because a crashing free fall would be the crypto market going from 60,000 down to 10,000. A correction would be the crypto market going from 60,000 to 50,000, 48,000, creating a pocket where basically the real value of the asset shows itself. So this is no different than how watches work. Some watches, like the 4991R, was wholesaling for almost 500K, like 480 to 500K. And today it's wholesaling for 450K. And I believe that the real value of the watch is somewhere around 4 to 420 at the most. So what happens now is we're getting that adjustment to come closer to where it needs to be, which is still trading almost 4 times an MSRP, but still not at 5. So the correction is the excess, not the actual core. And that's one of the big things with watches. Like, as long as the environment pushes people to have distrust towards government, distrust towards currency, want to actually put their cash to work, watches will have a strong place in the economy, which is why I'm particularly taking more positions going forward in the next few months rather than bailing out of the market. So if you found this helpful, again, don't forget, you can become a watch investor with as little as $1,000, access to a post office and a computer by clicking the link in the description and learning exactly how this process works. It's a free 60 to 90 minute training where I'm gonna walk you through how to get started. In addition to that, if you'd like to learn more or continue to see content like this, please like, subscribe, and turn on notifications. And in the comments, let me know, what do you think? Do you think we're gonna see further crashes, or do you think the dip has already taken its place and we're going nothing but back to the moon?